Well, Sunday morning, PK here with Out of the Box. Let me put the phone down. You're not going to believe it. First of all, I got a microphone. You believe it? $15 from Amazon. Who needs a 3-camera shoot with effects and lots of editing? And all you need is the microphone. This will do it. This is going to I can hear myself. You can hear myself much better. And what are we going to talk about today? And this is one of the most important videos, trading videos, about making money that I'm going to make. Which is, what are the most important trading tips to be a successful trader? I'm going to break it down very, very simple. The books, websites, the YouTube channels, they give way too much information. They don't really want to break it down. I want to make it very simple. That's the most important that I found from 35 years experience. And remember, this can apply to stocks, to futures. I don't care what it is. And so what I want to break it down to is two things: risk management and how to handle yourself once you're in that trade, when you're in the market. When you push that button, then you're in. This is where all the problems happen. Because believe me, the trading is a battle against yourself. And this is where all the emotions come in when you have your money on the line. So let me start quickly with risk management. There's some books on this, they talk about this. And I'm going to make it very, very simple with 6 things. Number 1, practice on the simulator. I don't care what strategy. Practice on the simulator. They're free. You can get some experience, whether you want to do stocks, whether you want to do futures, trade that Bitcoin. I don't care what it is. Practice on the simulator to get your confidence up and have some strategy before you put your money on the line. Number 2, and this is where all the books are wrong. They're right in theory and mathematically. Everybody wants to know, how much am I supposed to risk per trade? What percentage of my account? Whether you got 1,000, 2,000, 100,000, a million, I don't care what size. This is always a question, and most of the books you'll find will say, don't risk more than 2%, 1.5%, 2%. It's wrong. It's too much. I'm telling you to risk half of 1%, 0.5%. And the reason is you want to be able to survive emotionally when you lose 3 times in a row. This is the breaking point for all of us, including me. I don't care if you've been winning, when you lose 3 times in a row, something happens to us, our ego, this, that. You start questioning yourself. And this is when you lose your discipline. You want to make it back quickly. You start making mistakes. So the whole thing is by betting smaller, this will keep you from blowing your account out. This is why you're risking 2%. You don't want this to happen. So that's number 2. Number 3 is set an emergency stop. Okay, you're watching your screen, you're watching your trade. You don't want to put a close stop in because you're afraid they might run it and take it out. We all have this fear. Does it happen? Of course it happens. But put an emergency stop very far away from the market, just in case some announcement hits. Something happens in the world. There's a war, a shooting. Who knows what it could be. And that market can move so quickly in 1 minute and break you. It really can. It's happened to me. I'm telling you from experience. Set the emergency stop. You'll cancel it. Remember, it doesn't cost you any money to do these things. You've set it very far away. But at least if a disaster happens, because believe me, you trade long enough, which I'm hoping that you're going to last long enough, you're going to encounter this situation. Some disaster will happen And if you don't have that emergency stopping and you're on the wrong side, which seems to be always the case when these things happen, it's gonna cost you, and it's so unnecessary. You'll never be able to act quick enough because it gets out of your way. Number 4, look for momentum style trades. You can look in books. What does this mean? This is something you have to find out on your own. But what this typically means is you want to buy as it's going up and you want to go short as it's dropping. Instead of the opposite, buying on the retracement or selling on the rally. A lot of people like this. I'm not saying the momentum is any better or you're going to win is any higher probability. It's really the same. But the difference is that emotionally it's much easier to handle these momentum style trades, because what happens is when you get in, no matter what it is, stock or future, it should go right for you. So you're not going to sit there. When you buy the dip, it can hang down there for a while. And over the time, you start questioning, oh, maybe I did the wrong thing. And then it goes. You're trying to avoid all these emotional battles, as many as you can. It's hard enough to maintain your discipline over the time. So I would look into this type of style of trading. Again, stocks, futures, and remember, I'm not really talking about day trading. Day trading is, I don't think anybody can really do it in the long run. You can have great success, but you really should go for a little longer. It doesn't mean it could be, you might have some trades that will work in a day, but you really should think, if you're a shorter term trader, that for me, since I got back in 2007, I'm going for 1 to 4 days. This is my niche, is that shorter term. Let's see, number 5 is, if you get off to a good start and you're winning, your confidence is up, you have a good feel of the read, what's happening in the market, up the bet. Start betting bigger. Increase your share size. But everyone says, what does this mean? Up your bet. How much? Nobody wants to say how much you should. This is up it. This is not enough information. Up it by 4 times. 4 to 1. So all of a sudden you're risking 2%. I'm telling you to risk half. And then you really could start pulling ahead, because we get in this rhythm, in this groove, this confidence happens. This happens in the trading when you're on that, when you may call it a hot hand, you got in a roll, so you want to start betting bigger, but 4 times bigger, because then you can handle a couple of those losses. Remember, 3 in a row is the number. You got to mentally survive 3, even 4. I've had 5 losers in a row, once in a while even 6, and just as the opposite, you could win 5 in a row. Whatever happens to you on the plus side will happen to the negative side, but the difference is on the negative side, you got to be able to handle yours. Emotionally, you got to be able to handle it. And then number 6, this is again very, very important, is if you start losing. Let's see, the number for me I recommend is 10%. If you lose 10% of your account size, I don't care what the size is, stop. People say take a break, trade smaller. I'm taking it one step further. Stop and go back to the simulator for a little bit. Whether you want a new strategy, refine what you're doing, practice. It's funny, even though it's not real money, but you get your confidence up. There's no reason to bet it small to get your confidence up. Maybe if you have a huge account, you could do this where the money is meaningless. And most of us are going to be trading as much smaller money. So I recommend going to the simulator, working out the little problems that you're having, and then going again with another 10%. So this is my risk management 6 tips. Let's talk about the second part of trading, which is, I think, even just as important actually, is how to handle yourself once you're in. Once you push that button that buy or sell, you're going to go short. This is when your emotions start taking over, because you've got real money on the line. And this really can affect you. This is why the trading on a simulator, all of us are tremendous. We're all multimillionaires on the simulator. You will be too. You'll think, the trading is so easy. I don't understand. Now you go to real money. Why is it so hard? It's because your emotions take over. It's funny too. Again, they should write a book just on these topics, because all this books about trading, I think it was day trading, long-term swing trading, I don't care what it is, they only focus on, how to buy, what you should buy. They don't talk about these things. I'm trying to make it as simple as possible so you can go out and do it. Remember, out of the box is about taking action, not about thinking about it and reading about it and building a plan as simple as possible. So the question is, I break it down to 4 things on how to handle yourself once you're in that trade. Number 1, don't glue yourself to the screen. Whether you got 1 screen, I used to have 6 screens. I'm down to 3 screens at my old age. What you want to do is use a short time frame to get yourself in. Analyze it that way. Whatever that means to you, with a shorter time frame. Then once you're in, switch over to a long time frame. Daily, weekly, whatever type of trader you're trying to be. If you're a short-term trader, you're looking at 5-minute charts, then go to the hourly. But don't sit there in front of that screen when you're in the whole time. It will only hurt you. This is why I recommend changing the time frame, because then as it's moving, it's not on this, and visually you're not going to have this emotional battle going like, oh my God, it's dropping, I should get out, move my stuff. You start making all the mistakes. Number 2, again, a critical. Everyone's got this wrong in the books. They all say use a trailing stop. Trail your stop up as you're winning to protect the winning. I'm telling you, in the reality of trading, this strategy does not work. Unfortunately, it's just too good to be true, where you can protect your money and keep letting it ride. It doesn't work in real life trading. It only works in practice. The only time you should move your stop is to break even, after you get it at some certain point. But after that, this is something you don't want to trail your stop up. This is all wrong. You're going to see what's going to happen. You start moving the stop up and you protect your winnings, the market's going to take you out, and an hour later, 20 minutes later, 3 days, is going to be much higher. Say, God, I was in it. I blew it. This is the reason. Don't trail that stop up. It's a huge mistake. And the other thing, too, the books always say, all the trading books say, how much to go for. They all say, how much should I try to win? I don't care what type of style of trader you are. The number usually is 3 to 1. You risk 100, make 300. Risk 1,000, make 3,000. This is what the trading about. I can tell you from experience, I've done this. Yes, you can make some money, but believe me, in the long run, it's not enough. You need to, I recommend, really, what I'm telling you, number 3 is, you want to go for 10 to 1. You need to have these bigger winners. They happen less frequently. Yes, the 3 to 1, 2 to 1 trades, they feel good for the moment, but the next day or the next week, you're going to blow it. You're going to grind yourself out, and remember that trading is about keeping your mind together in the long run. This is what it's all about. And so I'm telling you, as we know the saying, keep your losses short, let your profits ride. This is true. You got to do it. But the number in your mind, go for 10 to 1. If you start grabbing it and you think, and the books will say, mathematically, 3 to 1 is correct. But the reality, again, you're going to make mistakes along the way. All of us do. I still do. Just nobody is that good, especially if you're making a lot of transactions. And number 4, I've mentioned this before, is if you have a winning month, a winning quarter, however way you analyze it, but don't let it go too long. Take 1/3 of the money out that you've made and spend it. Make that money real. Take it, pay your bills, go on vacation, buy your girl or boyfriend a gift. But you got to make that money real. Don't let it sit in that account and say, I'm going to make it more and more and more. I'm saying, so take 1/3 of your winnings, not your account size, of how much you won, and immediately spend it on something. And this will make it real for you, and not only that, it'll really give you huge inspiration to make those next, to continue on, to power on through. Make the money real. So to summarize the whole thing, look, you want to be a successful trader, it can be done. I've done it. I'm doing it. We have lots of stumbles. I'm just trying to make it, cut the time for you and give you the tips I wish someone gave me, because it took me years. These things are not in the books. They're not on any of these YouTube channels. And these million trading videos on how to trade and what to put the stop and what to pick and using indicators, all sorts of this stuff. Forget about all this stuff. Focus on this, listen to this over and over again, and take my advice. Take it from somebody who's 35 years in the business, been a trader. Way before there was computers, what we're doing over the phone. I traded on the floor. I lost every day for 2 weeks. Was actually a horrible trader. I went to COMEX when I was 25. Didn't work for me. It wasn't tough enough. And so, what are the 3 things to summarize? You want to be a trader. 1, you got to have dedication. You got to be dedicated, and I mean for the long run. Number 2, you got to have self-reflection. Trading is really about a battle with yourself. I mentioned before, so you're gonna find out what you're made of. Fear and greed, all these things come up for you. You can't hide from yourself. There's nobody to blame for your success or your failures but you in the trading. It's not like having a business. The employees screwed up, the customers suck. There are no excuses. This really is pure capitalism, being a trader. That's what the appeal to so many of us is. But you've got to take 100% responsibility, which requires a lot of self-reflection. Some people, you read people say you should write a journal, a diary. I'm not a believer in writing diaries and journals, because you're not going to go back and read them later. So, but it is about self-reflection to keep your mind without flipping out, because this is a question of you, whether you're winning big or start losing. Both sides can affect you in a negative way. That's what I want to tell you. And of course, the last thing is you need lots of practice. This is something no different if you want to be a great guitar player, a great snowboarder, a great athlete, a tennis player. I don't care what it is, a violin player. You want to be great at something, it takes a lot of practice and real-time practice. And that's why you want to go from, you got to have your money on the line and trade small to give you this practice, to develop the skills, to develop the confidence. Start losing, I mentioned, go to the simulator, then come back at 10%. So anyway, I hope I helped you. This is PK with Out of the Box. And I wish everyone a great week, and we'll speak to you tomorrow. Ciao, you guys.